I'm here with Juthica Chou, head of over-the-counter options at Kraken. Juthica, great to have you here.
Thanks for having me.
We're here at the Blockworks Digital Asset Summit in New York. Just heard your panel. Can you break down what are over-the-counter options in crypto? Because in the traditional worlds, there's puts and there's calls, and those are sort of the quote simple derivatives that are traded on exchange. And then the complicated stuff like interest rate swaps is over-the-counter. So in crypto, when you say over-the-counter options, what sort of stuff are we talking about?
Yeah, so there's the two components, as you mentioned. So there's the over-the-counter and then there's the option. So we'll start with the option side. The option side are just the products that we offer. So we offer vanilla puts and calls are the primary products that we trade, though sometimes people come in for slightly more complicated structures. And then there's the over-the-counter aspect. And so that means that we're trading bilaterally. So as opposed to when you might go to like the New York Stock Exchange and you trade on an exchange where there's a number of buyers and sellers and you match at the exchange and you clear at the clearinghouse. In this case, you call up a desk and you trade directly with us. And so we do a lot of the big trades that we do are vanilla puts and calls, but we trade directly with high net worth individual and institutional clients that are Kraken clients and clients of the exchange, but they'll come trade over the counter to sometimes do larger trades that they can't necessarily do on exchange.
Okay, thank you. And are there any sort of is it all puts and calls, or are there other structures?
We primarily focus on vanilla options, which are puts and calls, but some of our clients sometimes like to put them together in terms of combinations of trades if they want to maintain structures that are delta neutral or vega neutral. So we do a lot of combinations of those, but I would say vanilla puts and calls are our bread and butter.
Okay, thank you. And I want to talk about what sort of the market, maybe the volatility surface of options indicates about maybe investor sentiment and positioning. So for example, I saw and I heard at a very bullish time in the markets, maybe March, April, May of 2021, everyone was just extremely bullish because the price had exploded higher. So everyone was buying lots of calls. So calls were more expensive than puts, which in the equity world, as you know, it's not something you typically see because everyone in equities is afraid and they want to protect. So is that still the case that like implied volatility for calls is more expensive, and how has that space evolved over the past year?
Yeah, it's a great question. It's not still the case. So the implied volatility is a measure of kind of an uncertainty. And when people were buying call options and the volatility was going up to the upside, basically it meant that people were more worried about a much larger move to the upside than they were to the downside. And I think since we've sold off from that bull run, since we've entered a bear market, and since we started trading with the global markets, the global macro factors, and looking more like the NASDAQ and the VIX, we're starting to see more put skew. And so that means that more of that uncertainty and more of the higher volatility is to the downside. That's where people are buying more protection. And so I think in general, volatility actually until the last week or so came down a little bit. In Ethereum, it's still a lot higher heading into the merge, again, reflecting a little bit of that uncertainty. But no, the call skew and that call wing elevated volatility does not exist anymore.
Very interesting. And then, so we're recording on September 14th, hours before Ethereum will merge. Over the past few weeks, have you seen increased volumes? What have you seen in the market for Ethereum puts and calls? Are people buying a lot of calls because they think it's going to go up, it's going to go bullish? Are they buying a lot of puts? Are they doing straddles thinking it's going to move, every which way? What have you been seeing?
Yeah, so it's been an evolution. So I would say late July, early August, we were seeing a lot of call buying. And we've been seeing a ton of Ethereum volume as compared to Bitcoin, not really surprising. A lot of call buying. I'm into that rally up to 2K. People were buying calls. Then it kind of shifted a little bit where people were taking more nuanced directional views. So sometimes buying one call, selling another, doing things that were a little bit more vol neutral. And I think that's because vol has been at such an elevated level. People were looking for ways that they can speculate, but without it being too expensive from a premium or volatility point of view. Into the last week, it's been really a mix, some amount of unwinding some positions, actually, some amount of actually selling volatility through yield generating strategies. So it's been a really healthy mix into the merge, and it'll be interesting to see what happens tonight.
It definitely will be. So you mentioned yield generation strategies. In the TradFi worlds, you have people selling puts to generate income because interest rates used to be so low; they're not so low anymore. Or sell upside volatility as well, selling calls. I know that's a relatively new phenomenon in crypto. how big has that become, both in the centralized, I guess, derivatives world, as well as decentralized options vaults, which I hear about?
Yeah, so it's become pretty big. On the centralized desk, it's definitely our biggest trade by far, in terms of just what people come to us for. I think it makes you get a lot of holders, a lot of hodlers, a lot of people who have crypto. It makes a lot of sense to pledge it as collateral, sell calls against it. We also get larger institutional clients as well as high net worth individuals that are okay buying in lower. So they're okay selling puts. And if they end up buying Bitcoin or Ethereum at lower prices, they're comfortable with that. So I think it's definitely made its way into crypto. It makes a lot of sense because volatility is so high, you can actually get good yield, as opposed to if you looked at equities markets, at least before VIX has been around 30, with lower volatility, it was harder to get such yields. And so as we've seen it take off in the CeFi space, I think proportionally the DeFi space is taking off as well. It was definitely a little bit bigger in the bull market when people were just more active in DeFi and before some of the events of the past few months. But overall, yield generation is pretty big. And I think the fact that people know where the yield comes from with options when it comes from the volatility has helped grow that market as well.
Right. And in what sort of markets would large institutions like Kraken, like yourself, be more inclined to be a buyer or a seller, or maybe more inclined to be long or short gamma? For example, this is a pure generalization, but on a single stock call option, in typical, like a large TradFi version of Kraken would be selling that to retail people who want to get exposure to that, or hedge funds or something. But then let's say a put option on an index or something like that would typically be sold by retail. So in what area are clients looking to buy options, looking to own vol versus be sellers of it?
It really depends on the environment, So when we were in the bull market, I think people were much more willing to or interested in buying options because it's more speculative. And when you're in a sideways market, people are looking much more to sell options. Kraken, our job is to just facilitate the liquidity either way that clients want to go. And it also depends on where realized vol is trading relative to where implied vols are trading. But I would say right now, predominantly the flow that we see is to sell options, given that we've been in kind of a sideways market. And so clients are looking for both yield generation, but they're also a little more comfortable being short vol at these levels.
That's very interesting. Could you speak about the level to which macro transpirings have affected the crypto markets? Since its inception for the first 10 years of Bitcoin, it was weekly correlated, and then weekly positively correlated, weekly negatively correlated, sort of switch regimes. But since 2020, it's been a pretty strong, persistent correlation between the NASDAQ. In what way has that, do you think, changed the market, both in general, but in particular for a large institutional firm like Kraken?
Yeah, so the crypto used to trade more idiosyncratic, which I think was interesting and had its own opportunities. I think it's obviously trades more with macro now, and that's partly a function of what we see, at least from our point of view, is the nature of the participants. And so once you have more participants who are institutions that engage both in TradFi and in crypto and are trading the two between them, you end up getting some of these like self-fulfilling price movements. And so that contributes to it. For us, it's more just in terms of how we think about risk. Years ago, when I was running LedgerX and we were doing Bitcoin options, you didn't have to think about a CPI number coming out or a jobs number. And now it's completely different. And to me, it's sort of funny. It's a little bit full circle because that's what I did when I was a trader at Goldman. But it changes the way that we think about risk and the types of events that'll affect price action.
Yeah, that's really funny. What about hedging risks that are a little bit more complicated than just Ethereum going down or Ethereum going up? Things like impermanent loss and other risks. To what degree are clients looking to you to sort of hedge those risks, and in what ways?
Yeah, so we hear people talk about hedging impermanent loss. I think that kind of demand is really going to depend on how big DeFi demand remains. And I think as DeFi gets larger, we'll see more and more of that, basically hedging some of the short volatility exposure there. In the early days, people didn't really care about it because there was so much easy money to be made, in just tokens going up. But now in this kind of market where people are being a little bit more precise about understanding what their returns are and what risk they're exposed to, we're starting to see more interest in hedging things like impermanent loss.
And on what digital assets do you quote? I know it's Bitcoin and Ethereum. Are there any other ones?
We are primarily focused on Bitcoin and Ethereum right now. We could do a couple others, but I would say actually the demand, especially over the last like 3 to 6 months, has just come back to being Bitcoin and Ethereum, as opposed to last year when a lot of people were inquiring about altcoins.
Wonderful. Well, Juthica, thank you so much for joining us. It's been a pleasure.
Thanks for having me.